Now, time for a business update, Hannah.
Yes, Joanna, yes, of course, it's been the big story of the day, and Chris Roebuck is a banking expert with the Cass Business School in London, and he joins me now. Now, these proposals were pretty much what analysts were expecting. Do you think any aspect of it took the banks by surprise?
To some degree, maybe it was a little less draconian than some of them might have expected, because if you look at the political pressure that was exerted on the sort of committee, one can say that actually they might have got off lightly, because the actual ring fence is a flexible ring fence, so there's the capability to leverage clients between one and the other, as long as the monetary side of it is kept separate. So actually it's come out pretty well for the politicians, it's come out pretty well for the banks, and hopefully the politicians will think that the public's pretty happy with it as well.
But if the banks have some flexibility to decide what may or may not qualify for being in or out of that ring fence, is there some argument that the banks might actually try and game this situation to their advantage?
There's always a possibility that some people will try and game it, but if we go back to the causes of the financial crisis initially, much of that was about bad leadership taking bad decisions. And in any environment, no matter how much you regulate, if you've got bad leaders, things are going to go wrong. So what we have to hope is that actually the culture of the banks has changed, so that the people at the top make sure that the people lower down stick to the rules.
Now, there's some talk in the report about the cost to the banks being estimated at between 4 and 7 billion. How will that be borne, do you think?
Logically, if you look at the amount of money that the banks are getting in, one could take it out of other expenses. So people say, well, you could either reduce shareholder dividends, you could reduce bonuses, etc. Hopefully they won't take the quite easy avenue of passing the costs on to customers.
Well, all of this is going to require some sort of reorganisation, isn't it, with the banks? Is that going to result in job losses?
Probably not, because in general terms, those banks that have retail banks and investment banks already have the administrative functions of each of those separate, because each of those serve different types of customers and they do different types of things. So substantially, to some degree, the back office, as it's called in those institutions, is already separate.
OK, thank you very much, Chris Roebuck. Thanks very much.